a rough month August has been for most African bourses, some worse than others. But let's just take a look at the continent as an investment opportunity here. Where do you see the best opportunities to get exposure to African markets at this stage?
Well, I think the Ghana Stock Exchange remains in a sweet spot. You know, you've had the oil being taken out of the ground in December, you've had a reduction in interest rates, lower inflation, and it's been a very positive narrative that's driven that bourse up about nearly 20% in 2011, and I still think there's more to go there. It's got a positive feedback loop, and I think if you're looking at the continent, especially sub-Saharan Africa, I would definitely be continuing to allocate to that particular market. Counterintuitively, I mean, we've seen a lot of pressure in Uganda via the currency. I like the forward, the Uganda shilling on a 1-year forward, and I would also be looking at the Uganda stock market on the basis that we might see a Ghana a replay. Ghana was very weak before the oil was taken out of the ground, and then we got this good rally going. So I think Uganda is also worth a look at. Nigeria, South Africa down just under 10%, about 8.5% and change. I think Nigeria looks to me a better option, notwithstanding the fact that the gold price is continuing to go higher, which should be supportive for South Africa. But I just think South Africa is very much beholden, highly correlated to developed markets, and tends to react practically immediately to what's going on in the Western world. So looking nearer to home, Kenya, we're down 22%. It's been a pretty brutal sell-off this year, but there's plenty of value. But you're not going to get a quick turnaround, I don't think. You've got to look ahead and look 6 months to 12 months down the road and pick up some cheap shares. But you know, all our markets are illiquid. You can't just turn your head away when the markets look bearish. That's exactly the time when you've got to be putting your thinking cap on and picking up some cheap stock.
Let's look at one stock on the Kenyan bourse yesterday, top riser, Standard Group Kenya.
Yes.
Pre-tax profit there up 6.5%, 230 million shillings. Sales up by 6% to 1.63 billion shillings. Earnings per share up 27%, but this on the fact that you know, there's a thin float of stocks on the exchange there. No dividend declared. The management cautiously optimistic going forward. If you compare this to last year's earnings rise of 20%, it's not pretty impressive.
No, I mean, I think, you know, we've definitely seen a slowdown. We're seeing that coming through in practically all the results I'm looking at. But having said that, you know, the media sector remains a strong story. I think we continue to see increased multinational and brand spend across this space as they look at it as a time to build real estate in people's minds. So I think, you know, this advertising spend remains positive. And I, for one, think they've played some pretty good defense. The problem with Standard Group is, as you correctly mentioned, the shares are mostly locked up with one of the first families, a previous president's family. And I think, you know, you're really looking at scraps of supply. They're not aggressively looking to increase the value of the share at this moment in time. So you're in for a bit of a long haul. But performance-wise, I thought it was very respectable.
So if you are going to get exposure to the media sector, which would be your preferred stock?
At this price point, I like the look of Scangroup, which has about 80% of the advertising market in Kenya and East Africa. I think that's come back a good deal. It looks good value to me. Very strong first half results. Key shareholder WPP on the share register. They've been able to execute with some distinction, and they're now spreading their wings through the rest of sub-Saharan Africa. And I think that's a bullish story right there.
A sentiment most investors have in terms of media stocks. Now, let's take a look at Access Kenya. That company is sweating their investments, as one would say, signing that deal with Bharti Airtel in order to give Bharti Airtel the option to use its fiber optic cables for fixed line calls. Do you like the direction the company is taking in terms of leveraging its investment in infrastructure?
Yes, no, I think that was a positive announcement, and it might well mark a floor under the price. You know, it's been in free fall. It was down about 58%, if I recall correctly, since the beginning of the year. Looking on a forward PE basis, implying from the first half, you're looking at a PE of about 10 on an implied forward basis, and I think that's probably good enough. I saw the very aggressive remarks that the MD made, and I think, you know, He's obviously trying to underwrite the share price, but I think his timing was actually quite good, and it might well do the trick here.
Are you convinced in terms of his bullish stance going forward?
They've always been bullish from day one, whether the market is up or down, so I tend to discount it quite heavily. But in this particular instance, I think he is marking a floor under the price. It's been a relentless downdraft, and at this price of 6 shillings and 15 cents or thereabouts, I don't see much more downside risk to the price. And if they operationally can start turning it around, then I think there's a little bit of upside looking forward.
Let's take a look at the tea sector now. East African Tea Traders Association predicting a decrease of 30% year-on-year in tea production. That's from last year's all-time record output of 399 million kilograms. Lumira's first half numbers don't paint a good picture. Are you factoring in a worse than expected year for the tea companies?
I'm beginning to factor it in. I've been quite taken aback at these numbers. Limuru Tea put me on notice when I saw a 50% production drop, and this is quite close to Nairobi, where the drought hasn't been at its fiercest. So I was very taken aback by that Limuru Tea number. East African tea traders, they're equally bearish. The local tea board seems to be behind this curve. We haven't seen the commensurate price reaction at the tea auction, which I think might be coming. But yes, I have been caught off guard. I was not factoring in a production drop of 50%. I was in the order of 20 to 25% maximum, and a commensurate increase in the price. This has caught me off guard, and I think one's got to look at these companies carefully.
Aly-Khan, very quickly, do you invest in the tea sector?
Yes, I'm quite a big investor in the tea sector on two bases. On a basic price earnings basis, because some of these shares are trading on PEs of less than 2. Williamson is a classic example. And on a breakup basis, these companies are worth 10 to 20 times their underlying share price if you were to aggressively sell them off and break them up. And essentially, that's the type of thing I'm looking for from some of these from the management. And I think they're being gradually persuaded of the merits of going after shareholder value creation as opposed to sitting on their hands.